Do you think we'll ever get back to 2021, or do you think that was just like an off year because everyone was so bored from the pandemic? They were like, let me just throw my money into companies.
I mean, boredom is a great way to spend more money. That is the number one reason that Rachel Anderson does, in fact, spend money, is because she gets really bored. I think we could potentially get back to that, but I wouldn't really anticipate that.
Welcome to Manage Chaos Podcast, where we give you the startup business rundown in less time than it takes for you to get to work. I'm Katrina Purcell.
And I'm Rachel Anderson.
And today we're going to dive into the Q4 funding trends from 2024 and see what that might be able to tell us about 2025 and what decisions we might need to make. Really excited to be actually in person with Rachel.
This is one of our very few and rare times where we actually get to be in person. And for our listeners who might be curious, we are in person because we've actually been planning the entire season.
The entire season, as well as South by Southwest. So that's very exciting. This is actually a trivia question, only our second time being together in person.
Yeah. I mean, the first time was May. And so it's been a solid 6 months or so. And I feel like this should be a trend. I feel like we should do this every half a year. People don't measure in half a years. I'm not sure why I said that. Every 6 months, every 2 quarters.
Every 2 quarters, we're going to get together in person. So the last time we got together in March, we'd already recorded quite a bit of content, we got together in May. We were trying to figure out how to launch the podcast. And now it's exciting. We're thinking about how to do season 2. So that's exciting.
And technically how to launch South by Southwest. So we've talked about this a bit on the podcast previously. In season 1, we unexpectedly got chosen to be a workshop at South by Southwest in Austin this year. That will be at the beginning of May, and it's really focused. March. Oh,
why can we not?
It's because it's late in the day.
Sorry, months that start with M, so if we could fix that, that'd be cool.
Yes, it's at the beginning of March. Please do not come in May. You'll have already missed it. In March in Austin, if you are a startup, there's an entire week conference of great, incredible content by smart leaders around the country, around the world, that come and fly in, and they have a specific track that is all about actually doing sort of hands-on workshops for a variety of topics. And so how to manage chaos is going to be our topic that we're really talking about for business leaders and for startups and people that just want a little bit extra business boost.
Yeah, so we are a bit chaotic today because we are in person, as we mentioned, and we are trying to actually record in person, which is a little bit more chaos than what we're used to. So generally we use StreamYard from home, and we're both at our own computers. And so today we're trying to use my computer to record. Rachel's computer has the notes, and we're also recording some live audio with this fancy microphone. So bear with us, but we're excited to see how this all turns out. So in Q4, we actually saw a boost, which led for 2024 to actually have more funding than 2023, which is exciting.
That was great.
Wasn't a lot, but it was a bit more. But still pretty dramatically off the highs from 2021. Do you think we'll ever get back to 2021, or do you think that was just like an off year because everyone was so bored from the pandemic? They were like, let me just throw my money into companies.
I mean, boredom is a great way to spend more money. That is the number one reason that Rachel Anderson does, in fact, spend money, is because she gets really bored. But as businesses, I do think there was a really unique time in 2021. We were in 2020 that kind of saw a lot of people saving costs kind of in a lot of different areas. You had facilities costs that you got to save. In some ways you had personnel costs that you were saving, especially because in the beginning of 2020, people didn't know what would be coming or how things would turn out. So they weren't changing jobs, which also means your cost for acquisition and employee engagement goes down. You just have a lot of unexpected kind of recoup. And so in 2021, you can spend that. And I think that was a really unique time. I think we could potentially get back to that. But I wouldn't really anticipate that. I would personally go back and look at kind of what the average was of the 5 years before 2021 and say, what is that rate of growth? How much is the industry really giving us? And then assume that that's probably going to be where we return, is about the same level there.
Yeah, I think that makes sense. I mean, there was dramatically less investment going into like 2018, 2019. It wasn't as exciting to be a flashy new startup. So we've also seen really a shift from early stage to later stage investments. The one thing that I think is somewhat interesting, though, is we've seen a fairly consistent amount since 2021 of angel or seed investment. And so I think one of the things for us to really dig into and where listeners need to be kind of understanding is what type of investment are they really looking for, and how can they leverage the right type for them based off of their networks and also what stage their company is at. What do you think?
I think so. We talked about this a little bit earlier when we were talking about really putting together this form of the podcast or this episode, I should say. One of the things that I think is really important to kind of talk about in this framing of where's the money and how do I get access to it and is it going to be spent on my business is really thinking through what stage of business you're at as far as money need and not trying to overreach from where you really need. If money is getting a little bit tighter and it's going into more of a late stage company, then maybe your particular small startup or small business is in a friends and family zone, an angel investing zone, a pre-seed zone, really not rushing into series and really not rushing what you do with that money as far as how far you want to push asking for investors and how you kind of classify your funding moment. And so with that, it can be really advantageous for you to not give away too much equity before you're really ready for that moment, before you validated your product, before you have a customer base, before you can really articulate why an investor should invest in you and how you're going to disrupt or affect a really large market. And so I think, if you're kind of checking off all those boxes and you're like, we are bursting at the seams because all we need now is cash to press play on what we've already validated, that's a great moment to go and actually look at who's in your network and who's in your area and, what is the investing theses of the companies around you or that you have access to. Great. But if you're not, then I think there's room potentially for you to hold back and not go for investing until the market is a little bit less risk adverse, which is what I think is causing people to go to late stage. But what do you think?
I agree. I think the other thing, which we've talked about too, is that there are other ways rather than getting outside investment in order to invest in your company, which is essentially customers, right? So
Absolutely.
Using revenue to actually, pay for the things you're doing, and making sure that you're solving a customer problem and that the customers are willing to pay for it, and that you're really able to not only hold on to those customers, but then reinvest those dollars into the business, I think is another way to have more control over your own destiny. A positive I would say is that when we look at the 4 quarters of 2024, the highest level of investment was in Q4. You could look at that in 2 ways. One way could be a bunch of funds probably had a deadline of 12/31 and really needed to invest money that they'd already raised. But you could look at it another way, which is sort of the election has happened. While there is some uncertainty, there is there's already been answers, right? We're recording this in late January, but there's already been some answers to how things are going to play out. And there could be, a rise to funding in 2025, given that, the momentum from 2024 was on the upside.
Especially in certain industries and areas, right? Like not all industries and areas will be the same, but some could really benefit from the decisions being made and the regulations.
Yeah, exactly. Or deregulation in many cases. The other thing that, probably doesn't affect our listeners was that really in Q4 and especially even, at the end of 2024 in general, was that flock to the $1 billion rounds. Right. So while it's flashy and it's exciting, I mean, clearly those are reserved not even only for late stage companies, but really for your OpenAIs of the world.
Absolutely.
It's not something that, a normal, startup is really going to aspire to get.
No,
it's the unicorn, right?
It really is a unicorn, and it's a unicorn for a reason. I mean, we have incredible businesses in the area that I live in North Carolina that is doing world-changing work as startups, and there's money out there for you. I mean, if you look at your total addressable market, your TAM, and you see the amount of opportunity and then the validation with your customers, so really doing your due diligence as you talked about and making sure that there's other ways to grow your business besides just cash influx. You don't need $1 billion necessarily to be wildly successful. I mean, it's nice to be a unicorn, but that's not really necessary for your business to thrive and grow and make millions of dollars if that's your goal. I kind of think about I don't know why, but Chapel Rowan, I love her, but like she popped in my head right now because a lot of people this past year was like, oh my gosh, she's an overnight success. And even she came out at one point and was like, I'm an overnight success who spent 10 years struggling to be an overnight success.
Mm-hmm.
And I sort of feel like that's also true when we talk about unicorns and billion-dollar valuations. Like, yeah, of course, that's every, startup's dream that somebody would see them and value them. And it would just be this like crazy like moment. It's just not the normal course of path. Usually companies take years and years and years validating and working really, really hard in order to make that kind of an impact on the world. And so I just don't think that ever having that expectation is going to set up you or your business well for success.
And I think there was we talked about already the late stage, the Q4 sort of boom that led 2024 to be higher than 2023. It was actually pacing to be lower. So I think it's exciting going into 2025 that the possibility that it will continue. The biggest change really year over year was those $1 billion rounds, right? And I think those were in the sectors where we all know it to be, right? So AI, not only AI though, applied AI, energy, right? I think the biggest thing for me about energy is to start thinking about, the fires in Los Angeles and different things that are happening as a result of maybe, climate change or potentially, the data centers using all the water. Has anybody else really been like shamed into maybe not using AI as much? Like every time I use Gemini now, I'm like, how much water is being used for the search that I'm doing? But I think, there's a room there for startups to start to think about like, how do we make these data centers more efficient, or how do we have energy that's more renewable and reusable? And so really solving larger scale world problems, I think will become a much more interesting place for angels or, more active investors to really be considering as we go into 2025.
Yeah, I was talking to an angel investor the other day, and the number one place that she invests is, in fact, in energy-related companies. And I think it's a really smart place to be if you understand the market, if you understand how those things are applied. There's a huge potential. And I think your point about data centers is a really good example. Like it's an unintended consequence of development and advancement as a society, as a technology industry. But we depend on other parts of our society and infrastructure of that to really support it. And so I think that's smart to kind of look at that holistically and say there's got to be expansion somewhere else because it all has to balance.
Right. I think the other thing about angel investing that I've realized is that I think more people are trying to become angel investors. So more people are trying to get a seat at that table. And so that becomes an interesting moment in terms of your networking, in terms of your who's in your sphere and who you can get introduced to. Because as people are starting to get their feet wet, they're more likely to invest in things that they feel really connected to or drawn to, right? An impact that they want to make in the world. But not only that, someone that they believe in. And so if they've met you, they've actually shook your hand, they've actually had a conversation with you, they're so much more likely to then invest in you. And these are going to be small checks, most likely, right? But it still becomes the ability to also increase the ecosystem of people who are investing, which, a topic that we talk about a lot is a good way to actually increase the amount of investment going to communities that don't typically get a lot of venture investing. And so getting out there and networking, but making sure that you're clear on what type of investors you're looking for and really what your value proposition is.
I think this could be a really great episode. Maybe we'll get a guest in here that's an investor themselves, and we can kind of talk about, from the perspective of an investor, how do you become one so that startups can understand when they look for angel investors, what are the things they really need to check off so that there's alignment? Because one of the things, I'm just going to do a quick plug. I recently joined this group of women who are getting together to just learn about angel investing, to hopefully become angel investors, to get more women in the industry, to get more women into startup founder or C-suite positions, and kind of this trickle up effect of like highlighting different problems than what, maybe are available otherwise when you have different perspectives at the table. And one of the things that I think is really interesting about that is that I'm learning so much about the startup world from a completely different perspective. And a lot of how an angel investor makes their decisions, because it's so early on, is yes, does this product check some general boxes of, desire, need, solving a problem, you've kind of done your due diligence. But more than that is that you are truly buying into the person, because that company might switch 3-4 times in the course of trying to figure out how to really launch that into the market in a sustainable way. But if you've invested in the person as much as the company, then you know that person will have grit or determination or endurance or passion or whatever that thing is. And it kind of helps. It helps know that your investment will still become something because that person won't let it go. So it really is important about that personal relationship, especially that early on.
Definitely. So I think overall, just as an FYI, our data for this episode came from Crunchbase. And I think main takeaways. So let's say don't try to be OpenAI or Waymo. That's probably, you should have started building 10 years ago, I think, to do that, right? You're not going to need multiple billions of dollars in these early days, right? So the local investors, finding groups like Rachel was mentioning that might be in your local area of people who are getting into angel investing. There is money out there. And I think you have to be a good judge of who is beneficial to you, right? It's not just about the dollar. It's also about the value that they bring to you. And our next takeaway, Rachel.
Yeah. So basically, there's really another way to get funding, and that's by focusing on getting the customers who will pay you, really solving problems for them like we've been talking about, and really focusing on building your customer base, make it really strong, make sure that you have the ability to do something powerful with what you have first.
And then another piece of advice we've got, which I think actually pertains not only just to companies, but even to people, be in your funding phase as long as possible, right? So how many of us, I tried to graduate college before I needed to graduate college just because I was ready to get to that next step. So don't be ready to rush through to that next funding phase, right? If you're in friends and family, stay in friends and family. Maybe your friend circle expands in friends and family, but stay there, right? And really utilize it as much as you can. Same with angel and pre-seed before you try and go to those, series rounds where it might be more competitive to get that early funding. The longer you spend in the early rounds, the more you learn about yourself and your company, as well as what investors are looking at and what they're drawn to.
Yeah, absolutely. And hopefully that'll help the funding catch up to where the market really is heading.
Yeah, I'm super excited to see what this report looks like as we get into, we're going to do these quarterly for the funding roundups for 2025. So we will see at the end of Q1 how we're looking and how we're shaping up. This has been another episode of Managed Chaos Podcast, actually live and in person. We will see you again here and